Where are gold prices headed and what should you be doing? For that, let's get in Peter McGuire of Exim Australia. Peter, hi. Thank you so much for joining us. I mean, this is by far, not an easy market. What's your sense when we stand at 2,400?
Well, good afternoon, Manisha. I said to you off air in January, I said 2,500's a chance, and I thought that really that was bullish on my behalf. But now here we are at 2,410 or so, or a bit higher. And you've got to say, I think 2,500, you'll take it out in the bag. But the way the momentum's going at the moment, I'm not suggesting it's going to hit 2,500 this month, but I won't be surprised at all. And I think that you're right, those forecasts of 27, 2,800, everything's achievable because it's nearly a perfect storm in so many ways. And it just seems to be a one-way traffic rally. It'll wash out. It'll probably lose a couple of $100 when it washes out. But the overall momentum is amazing. And, I think it's hit everyone between the eyes, Manisha.
Oh, well, it has, hasn't it, Peter? I also want to understand on what is the various stakeholders that they should be doing right now. So if there is a physical buyer, what should they be doing at these prices? What would you advise retail buying right now? And also, what's your sense on what the speculative buyers are doing? I mean, of course, they are long, but at these levels, should you be taking profit, going short, stay on sidelines?
Well, I'll answer the first part as far as physical. I heard some reports over the last 24 hours that Costco in America, they're selling nearly $200 million worth of gold per month physical at Costco stores. So that's the first part as far as retail consumption. Second part is you've got central bank buying off the charts when you're looking at China. Thirdly, you look at what's happening from inflation story, and if you're thinking of going short, how would you go short at these sort of numbers? It's probably a time if this is worrying you from a trading perspective, then, and if you're looking at paper trading, derivatives, then maybe it's a time to sit on the sidelines and just take a little bit of a deep breath. You probably ran well over the last couple of months as far as upside, and you never go broke, as they say, Manisha, taking the profit. So, just keep your mind and don't over-leverage yourself. I think that's one of the key attributes if you're trading leveraged products.
Oh, absolutely. Peter, from where we stand, I mean, as the forecasts go, we can go to 2,700 or 2,800 for that matter. I mean, do you see the rally getting tired at all, or do you think where we are right now, it could pretty well go there and beyond?
I don't think it's going to get exhausted. I think we're looking at, there's a lot of moving parts to this. It's an election year. You've got inflation. I've got Larry Summers coming out, professor from Harvard, saying there's a 20% probability. He reckons you'll have a rate rise. I've got inflation running hot due to energy prices at $90 a barrel. If something was to escalate and push geopolitics higher as far as energy prices, I don't think you'll see rate cuts, Manisha. So there's the other side of it. So there's so many components that are just that are moving and they're so fluid that are dictating price. And that's the exciting part of the market. And that's where traders are just absolutely all over it. So, I think one's got to be very mindful that, yes, you'll take highs out that people never dreamed of, I think. And I think the one that you've got to keep an eye on has got to be silver. The underinvestment in that market it's all coming home, and it's nearly a perfect storm for the silver market.
I will come to silver, Peter, but when it comes to gold, let's put this as a hypothetical, as a question. If there is a profit taking that does come in gold on a big move, where do you see support levels then forming?
Well, it depends on how much. But if you were going to see that and it happens this afternoon, then you'd say, well, maybe 22.75, 2,300. But if it rallies further from here, Manisha, aggressively, and you have $40 and $60 moves to the upside in a day, then that changes the footprint of it because you'd say, well, maybe $100 less, but it's just you've got to look at your technicals, and you've just got to see. Yes, it's overbought, but there just seems to be so much appetite globally that I can't give you a floor where that's going to go. As I said, it could wash out a couple of $100, but I think the overall momentum is bullish, not bearish.
Peter, also, I mean, we do know that hedge funds are perhaps one of the last ones to enter the rally, and we see that happening right now. ETFs, yes, there is buying, but not to an extent that you would see these kind of prices. HNIs are just about adding their positions into this place right now. So would you say that the last leg of rally, which does come in from all of these people, is just about coming in now?
Yeah, and there's the other side of it. I mean, the hedge funds are really, and I'm sure that they're going to be very aggressive with it, and ETFs. But I think one of the big issues is the underlying strength of the retail market and central banks in buying physical gold, Manisha. That's what they're, and I mean, you're in India, it's part and parcel of your whole psyche, as far as a nation, and very similar in China. And, the US, that people are starting to buy in record amounts, Africa, all through Asia. So, yeah, there's a lot of appetite out there.
Peter, a final word on silver. And yes, as you said, it's underinvested. And this is a fourth straight year of deficit in the global markets. And we've just started to run up on this one right now. Where are we headed on this one?
Well, it's $29 an ounce. I think that, I think your all-time high was, about 42 or so. So I think you'll take that out. And I'd say this year. So I think that, and if it gets to 45 to 50, Manisha, then we'll start to say, right, it's got more upside. But I think the gold to silver ratio is really crushed at the moment. And I think that there's plenty of upside for silver. So that's the situation. I think it's going to be a bullish year for it, and we'll just have to see how it plays out. It'll be wild, and that volatility will be here, but I think the overall momentum will drive it, significantly higher.
Well, bullish is one part of it and volatile another, Peter. It promises to be an unforgettable year the way it's running up right now. But thank you as always for joining us and making sense of what's happening in the markets. Thank you.